Market Wrap, coming to you live from the Mary MacKillop convent in Sydney. It's a wonderful place that I stay at when I'm down in town, and it's tranquil. You can really tell that Mother Mary is a saint. Anyway, I digress. A good night overnight if you're bullish stocks. The market turned, or the technicals turned a day or so ago, as I highlighted in my Go Markets Asian wrap for Monday afternoon. You know, when I did the technicals, the ASX looked bullish, the Aussie dollar looked bullish, and we've seen a rally. The easy money's been made in those, but the US markets came back from Labor Day and hit the buy button. You know, we had all the indices up 2.4% or better in the States. Europe was up 1%. European growth was upgraded from 0.2% to 0.4% for the last quarter. That's twice the pace of Australian growth, unbelievable as that is. But obviously, neither outcome, either here in Australia at 0.2 or in Europe at 0.4, is anything to write home about. But that certainly helped the euro, which is back up above 112 this morning. The overall risk appetite picked up, and we've seen a massive rally in copper overnight, something like 5% or close to 5%. That was on the back of the weak Chinese data. Even though that data was weak, we still saw that copper imports were strong. And it's interesting that that data yesterday, initially there was a bit of a wobble in Asia, but because the Chinese finance minister had doubled down at G20 in Ankara over the weekend and said that the Chinese were going to hit their 7% growth target this year, the idea of stimulus is certainly in the market again, and material stimulus, because if they are going to hit 7%, which we all know is, you know, marked to make believe, but that means they're going to put some money into the economy. Otherwise, the PMIs and those sort of stuff is just going to drive an even bigger wedge between what the official data is and what the unofficial and partial data highlight. So look for more stimulus out of China. Chinese government agencies, if I could call them that, were also buying in Shanghai yesterday, which helped drive the index up. So in the perverse world of markets, what's bad news is good news. But either way, there was a broad-based lift in sentiment last night. So, you know, that's a good thing. What we're mapping out here at the moment, and I've written about it in my Business Insider 20 Seconds report, which you'll find at Business Insider Australia, and also on my Go Markets report from a slightly more trading bent, is that we've had the big crash, we've had the bounce, had the little crash that comes after that, and now we've got these little aftershocks, and the market's trying to find a base. Now, whether it's a short-term base or a medium-term base in the Aussie and the ASX 200 and the S&P, only time will tell. And my overriding view is that stocks go substantially lower. But if we have a look at the charts here, and we have a look at the Aussie dollar, for example, you know, this is a classic way. Now, I discussed this the other day. This is a classic where we've got the market, the Aussies moved down through the bottom of the bolly band. That is a signal that we're going to go sideways for a bit. Gone sideways for a day. The MACD has started to move north again. We're in seriously oversold position. We're way below my fast moving average. We're going to come back to my fast moving average. That's my base case. So we've now made the first cent on the call for Monday afternoon when it was at 69, 20, 24, 25, 26, 27, 28, something like that. We're now back up at 70, 28. The level that we're looking for now is 70, 86. That's a normal place where I would pair some of my longs, probably cut it in half. But the momentum's such that it's possible that we're going to get back and look at this 71.88. Now, wouldn't that be an amazing thing when everybody's falling over themselves to call the Aussie lower? You know, the CBA is the latest at saying 65 cents, but it might make it to 60 cents. That kind of rubbish that you get from strategists all the time, because they're not trading, they're just talking. And you see, here's the big trend line. So that 71.80, you know, there's a couple of lines a bit messy there, but you can see that 71.80 is just a retest of the old uptrend. Now, if we think about what happened in oil a few weeks back, we saw it bounce, go all the way back and test its 10-year trend line and then reverse off. So potentially that's the setup for the Australian market. Likewise, the ASX 200, we've had this, and this is a bit messy, this one. I know that people say you shouldn't have 55,000 lines. I don't buy that at all. And the reason I don't buy it is that people watch old trend lines. So as long as you don't have a confusion of processes within your decision-making toolkit for buying, selling, holding, exiting, those sorts of things. As long as it's a consistent process, the number of lines hardly matters as long as you know what they refer to. It's one of the reasons why I always start with monthlies and then weeklies and dailies, and then I'm not really an intraday trader per se. I can be, but that's something I did when I was younger and more aggressive. And this process here, looking at dailies and that sort of stuff, seems to serve me much better and far less stress. But if you have a look at this ASX 200 here, and this is the Go Markets combination of the futures and the physical, we're back testing this little downtrend that's come through, and we're also testing my my fast moving average. So in physical terms today, you'd probably see another 30 or 40 points put on top of yesterday's 1.7% gain. Then we run into a bit of pressure. This is where I'd normally cut by 25% or 50% on my posi. But if you get through here, then you've got a nice easy run up to 52.70, something like that. That's probably what I'd be looking for. Now, if we have a look at the S&P 500, because realistically, this is the key. If you spread this out a bit, got a nice wedge here. So 1950, something like that, it's going to be a key level. Once again, on my fast moving average, a little bit of resistance. But let's give it another day. My sense is that we might have another couple of days of positivity. Now, my change in view, sorry, that's my Business Insider. I'm looking for the stop share button. There it is. Right, we're back. So, they're the outlook, and the outlook has, in the price action you saw last night, and in just the tiny little amount of charts I've shown you. You could look at dollar Sing and on a weekly basis, and you're probably seeing a top there. Euro Aussie's probably going to break out. There's a potential move there. We saw Euro Yen reverse, and part of my becoming bullish on the Aussie and ASX 200 was to exit those Euro Yen shorts, those sorts of things. So the market might be fractious and the market might be volatile, but the market is also trading in its normal, beautiful fashion, where if you've been around for a little while and you want to have a look at what's going on in the context of what we've seen before, we're seeing that. So it's not a time to get panicky or any of that sort of stuff. One thing I don't normally do in these morning notes is talk about the data flow from the day before in terms of Australia, but it really is worth noting the strength that, and I was a bit shocked to be honest, that was seen in the NAB business survey yesterday. Conditions, profitability, trading, exports of Australian businesses all picked up. That's a good sign for the economy. That's a good sign. Alan Oster said that the domestic part of the economy is looking stronger. That's a good sign that a low Aussie dollar is doing its job. Firstly, of course, it helps support the Aussie, but they're all good signs. And I just highlight that too, because if there's only one piece of data that I'm allowed to look at each month, it would certainly be the NAB business survey. If that was the only one, that would be the one that I would pick. Also correlated to the ASX 200 outlook and the Aussie dollar is the outlook for the banks and those sort of things. So some of the setups on some of the banks look pretty good too. Now on the data front today, we've got the Westpac Consumer Confidence at 10:30 Sydney time. In his preview last weekend, Westpac Chief Economist Bill Evans suggested that after the big bounce, it took it back to the 99 level, which is close to the long-term average, that because of when the questions were being asked, when the data was weak, and the markets were in a bit of a funk, we might get a bad reading. Who knows? He wasn't saying that that's going to happen. He just said it was a possibility. We'll know at 10:30 today. Got home loan data in Australia at 11:30. That'll give us a good sense of what's going on in that housing market and the impacts of APRA. And then Phil Lowe is talking at 12 p.m. Japan confidence and machine orders are out. UK trade production data, and then we've got the JOLTS survey in the US. But of course, at 11 o'clock, 11:15 today, we'll all be watching China to see where they go. I think that just like the rest of the world or the rest of the globe, there's a bit more risk appetite in the market. So it could be a day or two of positivity. I could look like a feather duster tomorrow instead of a rooster. But anyway, we'll see. So good luck today. Have a great day's trading. It's always fun, and there's plenty of action going on at the moment. Just make sure that your position sizes is matched to the volatility of the market and the risk that you are prepared to take. I'm not here to offer advice. I'm just here to talk about markets, but that's what I always use as part of my decision toolkit in volatile markets or quiet markets. So have a great day. That's it from me. I'm Greg McKenna. Bye for now.